Hello everyone and welcome to the quarterly webinar update for Wits Mining Limited. I'm Jess Fertig from Tau Media and I'm delighted to be joined today by Rudi Deysel, CEO and Managing Director of the company. Of course, the company's ticker code is WWI. Rudi, thank you so much for joining us.
Thank you very much, Jess.
So Rudi, this has obviously been a standout quarter for the company, marked by several milestones that you've achieved, all of which I'm very excited to discuss with you today. So let's just dive straight in. Obviously, setting the scene with first gold. So Rudi, the quarter report highlights 2.54 kilograms of gold poured in March, a landmark moment for the company, of course. Can you help investors explain what that figure actually represents in the context of where you are in the mine's development and why it shouldn't be read as a run rate production number at this stage?
Yeah, thanks, Jess. I think it's very important that all investors understand that our main objective now is really to do our development of the underground infrastructure. Now, the mine was always designed as such. We are developing 3 declines. One decline is the main decline, which will be the main access to the ore body for our 17-year life of mine. But we've got 2 additional declines that access on reef to the first level, which means that it's still a decline, which means it's a infrastructure of the mine towards that ore body. And the focus is really to have high quality access to the mine, which will stand up for the whole life of mine. Now, it's great that it's on reef, so we could actually benefit out of that ore. And that was always the design, and therefore that ore is actually diluted because there's some waste coming out with it because it's quite a big excavation. So main focus, it needs to be on the right gradient, it needs to be on the right line, it needs to be the right quality so it can stand the life of mine. So for us, the main focus is really where you can start looking at production is when you hit the stopes, from where your production actually will come. And that's when we start opening up that levels. And look, I can gladly say that we should access the first level, which is our first ore level, in the next week or 2. So, then one of those infrastructures are ticked off and completed, and that will also be a big thing for us. But the fact that we could actually produce 2.54 kilograms of gold just out of this development is a major achievement for us. And our main and biggest focus is actually to hit that steady state, which we will achieve by 2028.
Yeah, fantastic, Rudi. And obviously for any investors who are watching this webinar who aren't familiar with the company, so the mine Qala Shallows is in Johannesburg, and it's particularly exciting for me because I was born in Johannesburg, I'm South African, and this is the first mine opened in how many years, Rudi?
This is the first gold mine being opened in 15 years. So it's a major thing in South Africa. It's a major, and we do get that rightly so, the attention to this. So there's a lot of eyes on this mine, and there's a lot of support to make this successful. And things are going great on the mine.
But it's the Witwatersrand is it's a mining region that has produced so much gold in the past. The fact that this is the first gold mine open in the last 15 years, it's testament to the area, but also, I mean, if you can just give us an indication of how many, I think it's about 30% of global gold has been mined out of this region.
Yeah, so that's an interesting point. I don't think there's a real figure on that because if you Google it, some places it's up to 40% of the world's gold production. But just to give, it's huge. I think that there's no other area that produces so much gold. And the one of the big things about this is it's an ore body that's so well understood. Our processing facilities in South Africa was designed around this, and it's really been optimized to that point that there's a lot of confidence in firstly the geology as well as the processing capabilities in this. So fantastic ore body, and we are lucky to start that new mine in this ore body.
Yeah, fantastic, Rudi. And of course, I mean, mining in Johannesburg is so different to what I suppose a lot of other ASX sort of gold miners would look like in terms of underground versus open pit. So
Yes.
many ASX listed miners are open pit operations that essentially start at full production from day one. Qala Shallows is obviously such a different animal. Can you walk investors through what it means to build an underground mine while producing and why that model looks so different in the early months?
So one thing is, and I actually thought about this in any mine, even underground mine, you get different ways of accessing the ore bodies in underground mining. In open pit, there's a lot of upfront work that needs to happen. You need to do this waste stripping before you could actually get to the ore body and start taking that out. So, and then at some point you will have a stripping ratio that will reduce all the way, but you still need to mine it up front, and then you don't really produce any ore at all. And it's exactly the same with underground mining. You could access it through declines, which is, or you could access it through a vertical shaft. And once again, there's a lot of upfront development with that only produces waste while you do that first level intersection with a decline, but you need to complete a whole shaft before you could actually start extracting ore. Now, in our case, which it was actually, it was designed like that, that we actually, like I mentioned earlier in this discussion, that you could actually, we have declines on reef. So we are fortunate to actually utilize that and actually get ore production while we are developing this infrastructure. And that's totally different. And it was designed with the view that we will reduce our payback period and really get into that ore body much quicker by utilizing some areas that was established previously while we do the main development for the mine itself. So and that's why the economics is great around this whole project. And that's exactly how Qala Shallows is. It's totally different from other projects and makes this project so great.
Yeah, fantastic, Rudi. And now in the quarterly report, it talks about ramping up to steady state production by 2028. What are the physical milestones that drive that curve upward? And what should investors be watching out for as genuine progress signals over the next sort of 6 to 18 months?
So once again, the whole idea of infrastructure creation is to access on those levels. And then you need to go into the ore body and create your stoping areas. And that's where your main production areas are. And that's where you basically mine only ore out of it. So that's the point where you could really do proper grade control and metal accounting in terms of what that we expect in the geology and what we actually mine out of that area. Now, if you really look at the buildup, once again, our mine is designed in such a way that we constantly, month by month, and we are already doing that, increasing our ore production that we actually haul down to Ezulweni plant. So that's already happening, that buildup. But the real milestones that you need to look at is when do you hit that levels in the mine? First level, second level, third level. And this happens over the next 2 years up to 2028 when you start getting those areas and you get your first raise lines through. So that's actually the period where you can really start measuring and compare production profile, because the main objective for us is to hit that steady state in 2028. And in the meantime, the real focus is we need to have proper infrastructure that will support the mine. It needs to be of high quality, And once again, it needs to stand up over 17 years. So there's a lot of civil works going through it. There's a lot of geology that you need to negotiate. So there's a lot of work that goes into that. And the focus is more on the infrastructure than really ore production, especially in that build-up phase.
Yeah, interesting, Rudi. And there's been a lot of discussion in the market as well about ore grades and dilution. Can you explain to us the difference between the development ore currently being processed and the run rate of mine ore that will characterize steady state production? And when investors can or should expect to see the transition being reflected in the numbers?
So the ore body itself is 1.4 meters thick. Now, the decline that we develop, even though it's on reef, is 4.5 meters by 4.5 meters. So if you just take out, you just plug in that 1.5 meters strip or 1.4 meter strip into that 4.5 meters excavation that you need to make. You could understand that you will have your 4 grams per ton in that 1.4 meters thickness, but you still have the rest of the 4.5 and 4 by 4.5 meters of waste. In other words, no gold bearing rock that is still there. And that all being put together, that will dilute your grade. So when we do our metal accounting and our ore sampling, you really just look at the ore itself. And then you say, look, it's practical. If you mine it, it's almost impractical to go and split the ore out. So our whole mining schedule is designed as such so that we process everything. So in the beginning, you will give up some recoveries, but you put gold through the circuit and you still get revenue out of that development. Because in a normal mine, it would only be a capital expenditure, but we actually get some payment out of this. So that's an advantage for this specific project. Now, when you hit those stopes, then you only extract that 1.4 meters. And that's when you really start getting to see the real grades coming out. Now, if we look at the current sampling that we do on the ore body itself, we are actually outperforming on what we've planned. In other words, so far we see just positive results out of the grade, and we've got that confidence in the ore body going forward. So, once again, it's probably one of the best understood ore bodies in the world, the Witwatersrand.
Amazing, Rudi. And talking about outperforming, so obviously West Wits has achieved first gold. You completed a significant resource upgrade as well during the quarter, so 7.24 million ounces. You also secured fuel supply during all of this, macro volatility, and you raised $33.74 million through sort of institutional investment coming in, all within this quarter and leading up to it. So, Rudi, looking back at the milestones that the company has actually committed to, how has the delivery tracked against those commitments? And what does that tell investors about execution capability going forward?
Yeah, so I mean, we've said we're going to start the mine in July 2025. We've ticked that. We've done that. We said we're going to bring out our first ore in October 2025. We've ticked that. We've done that. We said we're going to do our first gold pour in March. We've done it on the 17th of March 2026. We've increased our resource from the 5 million to the 7.424 million ounces. That is a major uptick for us, and there's still, probabilities that we will increase that, but we've done that in this quarter. If you just look at that raise that we've done in January, I think there's a lot of people that would say, but why do you do a raise? And to be quite honest, if it didn't happen at that time, given the current situation in the world economics, global economics, it was probably one of the best things that could have happened. And remember, it was unsolicited raise.
Mm.
It wasn't planned at all. So for us, this was great and huge. And then it's with this whole oil crisis, we were one of the first companies that secured diesel supply so that we don't interrupt our operations.
Mm.
So, from just looking back at this quarter, it was a brilliant quarter, and it shows that this company will they will hit their targets, and their track record is excellent.
Yeah, of course, Rudi. And getting institutional investment is such a validation for, the leadership of the company and all of these milestones that you have achieved and continue to achieve. And I just wanted to circle back on the energy security and the cost control that you guys manage, or that Wits managed to sort of keep under control. And one of the highlights this quarter was securing that 163,000 litres of diesel and progressing to grid power connection, which you've sort of scheduled for Q4 this year. So for investors who are focused on operating costs, can you explain what transition from diesel to grid power means for the cost structure as steady state sort of progresses, and why acting on energy early really matters for this project?
Yeah, so look, just to deal with the short-term risk regarding the diesel, because currently we do run our site with diesel generators and as well as trackless vehicles. We've firstly increased our capacity to store on the mine. That was one of the first steps. And then we also secured that 163,000 litres to ensure that we could at least cover our diesel requirements for the near future, and we can cover it up to at least 4 months, which will get us some time. I think the big thing just to mention is that, if you compare it to a typical mine, a mine, they've got basically about 20% of their cost are in diesel. Now, currently our diesel exposure is about 8%, but remember, we are actually developing the surface infrastructure while we are mining. And we will be able to actually link up our electrical infrastructure to the grid. Will be completed by the fourth quarter of this, and then suddenly that 8% will drop to 3% in terms of diesel exposure. So that's a huge component in terms of cost savings in our operating cost. And that's once again, that will help all our all-in sustaining costs to come down and improve on the economics of our business as well.
And Rudi, I mean, in the quarterly and also a lot of the communications on the ASX, the company is described as being fully funded to steady state. Can you be specific about what fully funded actually means, what it includes, what the Nabari facility provides, and whether there's any remaining sort of funding conditions that investors should be aware of?
Okay, so firstly, I think it's well-known fact that we've got a lender's facility from ABSA and the IDC of 50 million. Now that's basically the bulk of the fund for the mine to construct the whole mine to produce 70,000. So that includes all your infrastructure and underground as well on surface, equipment requirements, etc. So it's all the capital requirements, but it must be supported by equity. Now, the big thing for us was always to raise that equity. Now, with the raise that we've done, it means that the gap of the equity is filled fully. So in other words, that plus all the debt facility that we've got enough money to cover the capital for this project. And then there's also a portion that will come out of this additional ore that we actually take out earlier And I say earlier because once again, we actually get it out of the infrastructure that we develop that helps the economics of this project before steady state. So this means the project is fully funded to cover the capital to produce a mine that can produce 70,000 ounces at steady state. Now, on top of that, we've got the Nebari facility as well, which means there's a flexibility in terms of the debt facility as well. So we can go both ways, and we are looking into that, and that will come out in time. So it means once again we actually got two options where we can go, and both options cover the whole capital cost to construct this mine, and that means fully funded.
Now, Rudi, looking at the bigger picture, so obviously Project 200 and the long-term scale of the project. So beyond Qala Shallows, you've commenced Project 200, scoping study targeting 200,000 ounces per annum. Without getting ahead of this study, can you help investors sort of understand how that aspiration connects to the existing resource base and what the stage pathway from 70,000 to 200,000 ounces might conceptually look like?
Okay. So look, we always had the scoping study that was broken down in 5 phases, of which Qala Shallows would have been the first phase, and then you would actually start adding the residual mining areas in the main reef area as well as the bird reef area. And then, Qala Shallows would develop into Qala Deeps, naturally down dip. And that would have increased the whole production up to about 90,000, the 70 to the 90. Now, we've done some study work up front to look at the ore body itself and what it actually can support in terms of production capacity. And we got to that point where we could see, look, this mine should be 200,000 ounces, and that's where Project 200 actually comes from. Adding to that, now remember recently we got the 2 prospecting rights on the down dip site in the Kimberleys that were added to the resource, and then therefore the resource went up from 5 million ounces to 7.24 million ounces, which means now we've got the strike distance as well as additional depth, which could support that Project 200. So in that, with that additional resources and information, we need to restate a scoping study to support Project 200. So that process kicked off in February, and we are targeting end of June to get that study done, and that will basically give us a blueprint of where to go forward. Scoping study, there's a lot of trade-offs that will happen between what's the best option, the optimal option, the most economic option to go, and which will include different trade-offs in terms of processing solutions, because it's a different story to process 70,000 or 65 to 70,000 tons per month versus around 180,000 tons, which you would require for 200,000 ounces. So all of that work will happen now. And then from the scoping study, we will then go into a more definitive type of study, which will get more engineering, all the trade-offs been done to the best optimal options, and that will be going forward. And from that point on, like Qala Shallows, we can then start with the construction of such a project. And that's a route that we follow in Project 200.
Thanks, Rudi. It's been such a phenomenal quarter. And as the quarter was released, shortly after that, on the same day, we had another announcement come out on Mt Cecelia divestment. Now, we already had so many questions coming in from investors about that. And can you walk us, or investors through the strategic rationale behind that decision and how it strengthens your focus on Qala and the broader sort of West Wits opportunity?
Yeah, I think that last point that you said, that's the biggest thing. There's this big focus on the Witwatersrand Basin project. and Qala Shallows, which it requires a lot of effort and a lot of focus to get into that production and to steady state production. The one thing that everybody needs to understand is that we still got a meaningful upside exposure in the Paterson region. So through Aventine and the deal that we've got with that, because they've got a very much a diversified portfolio in that whole area and a much bigger exposure. So, over time, this transaction really give us ongoing participation, through NSR royalties in that company, but it also broadens our exposure to all the different tenements that they actually own. So, it's actually a consistent revenue stream for us as well, and exposure because of the equity or ownership that we've got within the company, and that's much better for us because we don't need to really have an expensive exploration program that we need to have or intensive resource that we need to put into this whole project, and our focus can clearly go on to the Witwatersrand Basin project, which is producing, it's operating, and we intend to grow that much quicker.
Yeah, fantastic, Rudi. And of course, importantly, it wasn't something that the company needed to do. You had capacity to retain the asset, but on a balanced view, this divestment was just best for the refocus on Qala, but still maintaining an interest through equity in Aventine and also through your royalties. So yeah, congratulations. It just feels like, Rudi, just so many milestones in the last quarter being reached, a massive quarter for the company. I just personally want to say congratulations, and it's just been such a delight to work with you and the team. Really looking forward to this quarter and the continued progress, of course, leading up to the scoping study in June as well. Anyway, Rudi, thank you so much, and thank you to all of our investors, our shareholders, for your continued support and also interest in the company. If you have any questions, please always reach out, ir@westmining.com. Rudi, thank you.
Thank you very much, Jess. Appreciate your time.